The ability-to-pay principle holds that those who have a greater ability to pay taxes, measured by income and wealth, should pay more. One idea behind ability to pay is that those who have enjoyed success should be willing to give back a little more to the society that helped make that success possible. Proponents of ability to pay argue that a single dollar ultimately means less to a rich person than a wage earner, so the rich should pay more to equalize their sacrifice. Ability-to-pay taxation argues that those who earn higher incomes should pay a greater percentage of those incomes in taxes compared with those who earn less. For example, in 2020, individuals in the United States with taxable income less than $9,875 faced a 10% income tax rate, while those with taxable income of more than $518,000 faced a rate of 37%, the nation's top individual rate. Earnings between those amounts face tax rates as set by income brackets. The ability-to-pay philosophy of taxation maintains that taxes should be levied according to a taxpayer's ability to pay. The idea is that people, businesses, and corporations with higher incomes can and should pay more in taxes.